Most relevant focus should be on this chart today. This is the same 4 hours that we've been looking at every day since the beginning of the week, and it shows that we're doing shoulder levels, attempting to ascend above 160 to take out the cap placed by the Bank of Japan to limit price action in the in the dollar yen above 160. So we'll keep doing these shoulder levels until that cap gives way. The market top at 160 gives way. Today we are trading this up move. So this is the current shoulder level we're in. The market did already the move to the downside, bounced as of maybe day before yesterday, I believe, or early this week, 153.50, or even actually Friday bounced 153.50. Since then, there's an uptrend into a local high inside of the shoulder levels. This is HH here, SH here is the shoulder. We'll do multiple shoulders, right? Until it does something like a triangular formation and at some point breaks out, takes us out above the cap, above the 160 cap, maybe go to 162, over here showing 161.90. So we are trading this move to the upside, this green arrow line to the upside. Shows on yesterday's 30 minutes and I believe today's 30 minutes. Yesterday's 30 minutes shows that the move to the upside, of course, if it's going to be a local shoulder, must be moving inside of an ending diagonal. That's why you must see an ending diagonal structure and ending diagonal label and splatter momentum on the 15 minutes, maybe even on the 30 minutes. We are, however, confirmed since yesterday that there is a cycle extreme on the 30 minutes, bounced out of that level 1, while you have that thick green line. And therefore, the move is on low volatility, but trending higher. We are not going to get a B to the downside to do another shoulder. You see here inverted double shoulders, inverted double heads, I'm sorry. H and H are double inverted heads and double shoulders to the left. You'll expect double shoulders to the right, but the market is strong. Just done 1 and a 2, was doing a 3 and a 4, gradually moving higher inside of the shoulder level on the 4 hours, must be inside of an ending diagonal, as already been said. Let's take it to today's 30 minutes. This is what we're seeing right now. We have consistent positive momentum on the 30 minutes, so the splatter momentum must be on the 15. What we're getting, because we still believe we're an ending diagonal. Target this week is 158.28. This is, I believe, resistance 2. You get resistance 1 here showing. On the 30-minute chart, the volatility levels during the week should be somewhere between resistance 1. The volatility levels mean the maximum move that you can expect during the 1 week duration. So during this week, it's somewhere between resistance 1 and resistance 2, meaning you're looking at 157.60. If we have a strong trend against the yen, you're looking at 158.28. The market top here, that once you break above level A, you're doing level C. All right, so you do an equal measure of a level A. If you don't want to waste time with this position, seriously, the best would be to take an entry at 157 using a buy stop. If you're, of course, trading sterling yen, there's no point in trading dollar yen. But there could be a point, just 1 point in trading dollar yen if you have a high PMI number tomorrow in the dollar, in the United States. If you have a high purchasing manager number tomorrow in the United States, even higher than the one in the UK, if there is a surprise to the upside, and the US economy is the most resilient in the world, do not undermine it. Even when the numbers are looking like 50, they're bouncing out of 50. This is the point. You see, it is a very strong economy, really very strong production capacity and order capacity, and therefore it is really cyclic, will not really fall below 50. And therefore we get a bounce. If we get a bounce stronger than the one that you're seeing in the UK, this goes to 158 because it will directly impact stock markets and stock issues and equity and also, asset classes. And therefore, asset classes will get more value. You have a very strong rise in the United States dollar against the yen. If we don't get a good PMI in the United States, the market, these labels are actually correct. So let's go over the labels again. We have a 1 and a 2. We have an internal 1 and 4. This is momentum segregated. Internal 1 and a 2, a 3 and a 4. We've done a 5. The indentation here is almost same level as 2. It means we're getting an extension, but we could get a correction 4. between 3 and 4, that's quite lengthy. We can go all the way down to 155.57. We can go all the way down to 155.40. It is still a bounce out of a level 1. So these are, of course, the best entries. And with a hedge below level 1, if better, over here we're showing a hedge below level 3. Instead of wasting time and attempting to do a long at the lower levels, 155.57, we'll already be long in the sterling yen, so there's no point to be long in the dollar yen. Our focus is that if we have a strong number, market takes off immediately. Wave B doesn't do a double head, it is just a shoulder, local shoulder, bounces out of the 200-point moving average. We are in using a buy stop at 157, takes you to 158. Takes you to 158.20. You're just trading resistance 1 to resistance 2. That's all. Of course, on size and on everything, makes good money. So we can have an entry at 157, even 156.90, very possible. As low as 156.80 is also possible. The hedge is just below level 3, because if you've broken out of this, you're going to support level 3, support level 1. Alright, look at that yellow arrow here, means breakout, hopefully. And the target is just resistance 2. So we're just trading between resistance 1 and resistance 2. Close out and we're done. It's 100 points. Or if we are in at 156.90, 156.80, you can get as much as 140 points if we take profits at 158.40. And if it's a strong number, at least you will see 75% or 61.8% between the two levels immediately moved or spiked. All right, let's take it live. Further on, we are going to, once I believe market moves all the way to 4B, that's 4B here. Remember, we're doing shoulder levels on the 4-hour chart, so we get to move back again down to 4C. So we want to close out at 158, 158.20. Don't hold. Don't hold on the belief that we get to break out higher. 158 and 159 is really assuming we get a bearish reversal at some point, because this is capped by the Bank of Japan. Becomes wave 5, we see a 1 and a 2, 3, 4, and a 5. We may get a correction A, B, and C, but this is, of course, only theoretical. So long as we are still, so long as the Bank of Japan has problems with the physical and financial easing policy, we will not get a deep level A or a B or a C. So, of course, we've been doing this earlier. I believe you find it recorded on previous analytical sessions. All right, let's move on then. We take this live, check the entry, check the momentum. All right, and prepare, of course, for tomorrow's action. We're having good, positive, consistent momentum on the 1 hour. We have a bounce, a cycle extreme. We know this is out of a level 1 already. We may be getting a trigger tomorrow, but we did inspect the 4-hour momentum earlier this week, and this is what led us to confirm that the market is actually moving in a triangle formation. Either it is a rising ending diagonal, like the one showing here, or an ascending triangle that will reject at the same market high. The rejection is a different pattern. We have, of course, other charts for the rejection, how deep it can go, but for the time being, we just need to focus on the longs. So we could get a trigger at that point. We have a trigger here, and it becomes now a double trigger. If you're seeing positive momentum on the 5 and 15 minutes, or at least on the intermediate term cycles. A positive trigger is one way to consider that the market is breaking to the upside. A double trigger, is one way to consider that the market is decided to break to the upside. In this issue, this issue dollar yen is definitely decided to break to the upside, because definitely you get higher purchasing manager indexes in the United States, higher than in Japan, so you're going to see a move to the upside. And this is confirmed by the tweezer formation. You see clear tweezer formation. Equal number of shorts to equal number of longs, and the retraction is just 78.2%. Okay, so break to the upside, of course. 158.50 is showing here on resistance, so not even 158.20. So again, a buy stop at 157, even if it's at the neckline, means you are moving higher, probably. The daily, let's check momentum and the candle structure. Excellent positive momentum above both continuous, but the candle structure is not as strong as what we get on sterling yen. Remember, on sterling yen, we have risen above the old market high. We have a clear tweezer, and we're even continuing higher. Here, this is not really the case, not really showing. Let's take it down to smaller term, intermediate term pictures. We start with the 30 minutes. We can consider we're having a trigger showing here. Like I was saying, we have a double trigger, so we have really no problem. Let's now check the feeds. Very mild retraction on the 5 and good, also splattered momentum on the 15, but I don't believe we'll get the time to do a retraction because we're of course closing in on tomorrow's release. So our bias, we could be mistaken, of course, so please take this with a bit of salt or pinch of salt. I think this is how the saying goes. Or please do due diligence. Our bias is to use the double triggers. It means we're going to be moving higher. We bounced out to level 3 at that point, already bounced. All right, so our bias is to just buy either market, very close to market, or buy market. The hedge is now justified. Everybody understands why. Justified to be at level 1 because we shouldn't fail at this point anymore. We have a double trigger here and here, so the hedge is here. We have double internal supports, the hedge is here. There's no problem. Unless we all believe that, or we want to believe that we're getting a poor, very poor PMI number tomorrow below 50 for the US economy, which is highly unlikely. All right, and therefore, if you wish, we could do the long. Right, the hedge at this point is just 155, and that hedge is below the pivot level. We can of course take this on the 50 minutes to be below support 2 if possible, or just below midway between support 1 and support 2. The long at this point is only 156.50. We gain a further 50 points because using a buy stop will take us to 156.80 or 156.90 or 157 altogether. And the target still remains 158, 158.28.